Hello and welcome to Money Tips. This is Charles Kelly. Hope you're having a good day there. We're live on Facebook and I'm recording this for my Money Tips podcast, which you can find more details about on iTunes and Stitcher and also on moneytipsdaily.com. Right, well today it's Monday morning here in the UK and the markets have settled around the world. In America they've gone up slightly, 300 points, in London 47 points. That's not a lot, it's just but it's not going down and it seems to have settled. Trump seems to have calmed down a bit. He's not sent out any tweets last night, so maybe that's why the markets are okay. But I don't think that's the end of the market turmoil. We shall see what happens this week. Hi, good morning to people who are coming on. Hello there. I wanted to put one thing to bed, and that was that there'd been speculation that Sajid Javid, the new Chancellor, was going to change the way stamp duty in the UK was charged, and there was articles all over the weekend saying he was going to radically change it and was going to make the sellers pay the stamp duty, which I think would have been a very complicated system. He'd be better off just reducing stamp duty altogether or making it cheaper for first-time buyers and trying to change the whole system. I think it was unworkable. Anyway, he's come out today and said he's not planning to change stamp duty. So that's good news. Another sigh of relief, I think, in the market, and especially for agents and solicitors, because it could have caused a lot of problems. So I'm glad they've kicked that one into touch. Then I want to talk about students as well. Students often at this time of year they're gearing up to go into university in the UK, that is, and there's a lot of talk about debt, isn't there? That the average student now is coming out with around £50,000 of debt. I don't think all of that is tuition debt. In this country, we have a system where you go to university and you accumulate a debt by virtue of the student fee. So you don't have to pay the average of £9,000 a year. You don't pay it directly to the university. It's added on to your debt, so you will pay that back at some time in the future. Now you don't need to start paying it back. You don't pay it back in one lump sum. You pay it by salary deduction, and you don't start paying it until you're earning £25,725. That's £25,725 per annum. Then you would start to pay it by salary deduction. Now, obviously, if people come here from France and study and then go back to France, I don't know how they ever collect that money. Probably not. I don't know what happens about that. But most people expect that they will be repaying that debt. But the good thing is, if you go to university and you invest in yourself, and we talked about investing in many episodes. Well, studying is investing in yourself, and if you invest £50,000 in something and it gives you a lifetime's of earnings, that is a good investment, even if you borrow the money. So invest in yourself, and the figures show that you are twice as likely to get a job if you've got a degree. And that's true, because nowadays you've got to have a degree even just to get started in a job. Now, I'm not saying everybody should have a degree, but you need some after-school training. I don't think you could leave school and just say, I want a job now, because you're no way prepared for the job market. So if you're not doing a degree, you should be doing some sort of apprenticeship, some sort of vocational training, or training in a particular job. You don't have to go and study fine arts, but you could do a vocational course, but you need to do something after school. And most of it is either free or you can get finance for it. So it's relatively cheap compared to many countries where people can't afford to go to university and they miss out. And you don't need to go into halls of residence the other side of the country. You can study. Every town or city has a local university, so you don't need to go off. It's not like a holiday camp. It's a study. And there are also cheaper ways of studying through private institutions, where the cost of a degree could come down to £5,000 a year, and you don't get the big university campus, but you can study for £5,000 a year, pay it up front, and that's the end of it. And you would still get a degree accredited with a university, but study in the premises of the private college. I had a private college before, and we did similar things where you were accredited by an organisation or an institution, but you did it much cheaper than a university could do it for. So there's various options there. Now, the starting salary of a graduate in this country is around £34,000, which is £10,000 more than it is if you left without any qualifications. So that's a lot of money. And there's various figures at various ages, but as you move forward in your career, the people who haven't studied will fall behind. There's no doubt about it. I've seen it myself. In America, they estimate that every year of further education after school is worth $200,000 in lifetime earnings. And that was years ago. So I think it makes a big difference. It also gives you more confidence to have a degree, and it gives you more confidence to move forward and do anything you want to do. And it teaches you how to study, teaches you how to deal with a lot of work and get things done with a deadline. Definitely, if you can, go to university or do some further vocational studies at a college or whatever, but do something, an apprenticeship or something. Don't just leave school and say, well, there's no opportunity, because there are opportunities. There's definitely opportunities out there in this country anyway. There's a world of opportunity. That's why people want to come here, because they can see the opportunity there. I also note that one of the student groups providing accommodation is having a bit of problems. And I wonder if that's because there are less overseas students coming to the UK now. That it's not as attractive for overseas students to come here as it was 5 or 10 years ago. You can't get your visa so easily to stay on. The English tests are quite tough, and the fees are quite high for overseas students. So a lot of students, I think, are choosing now to go to other countries, such as Australia. One student agent that recruits students said it's easier to get into America than it is to the UK. Well, that's unheard of. It was always more difficult to get into the US than the UK. So I think that the UK, with the new government, the new team, perhaps needs to look at that, because students can bring billions of pounds of revenue into the country, and we're noted for being a centre of excellence for universities. Some of the top universities in the world are in this country: Oxford, Cambridge, the University of London. So I think it's a good idea that we start encouraging overseas students again to come into the UK. So that's it on the content there. I hope you're having a good day, and I wanted to go for my word of the day here, which today is dividend, or Divi, as it's sometimes called. People often see articles about companies paying a dividend, and there's one here actually that says that firms are paying record dividends despite fears of recession. That's in the paper today, and it means that companies are still paying the dividend even though they think rocky times may be ahead. And what a dividend is, if you buy a share or you have a share in a company, a dividend is like a share of the profits. And there's various ways of taxing it, but a divvy or dividend is like saying at the end of the year, at the end of our financial year, we've made this much profit, so we're paying a dividend to our shareholders of X amount of pence in the pound. So typically the dividend could be 4 or 5% of the share value. So they will pay a dividend on that share if they're making a profit. And it's saying here that companies are still paying dividends even though they're saying there might be a recession coming, because they want to retain shareholder confidence. So looking at it the other way, if you buy a share in a company, let's say you buy a share in Apple, that share price over the long term should go up. If it's a good company, if it's got good management and the economy's good and the company's run very well, the value of that share should go up. Certainly in the past 10 years, Apple shares have shot up. So people have made money on the value of the share they bought. Similarly, if they bought Amazon or Facebook when they started, they would have made a lot of money on the share price going up. And that's called a capital gain. But in addition, they're also earning dividends on the share. They're earning an income every year on that share. Just like if you buy a property, you buy a property for 100,000, you rent it out for 5,000 a year. You are getting 5,000 a year income or rent, which is a kind of a dividend. Same with shares. If you bought £100,000 of shares and the company's paying out roughly a 5% dividend yield, you would get 5,000 a year sent to you as a dividend. You can also reinvest those dividends. You could say to the company, don't send me that few £1,000s every year, just reinvest it and buy more shares in the company. And if you do that and the company's going up, then you will make even more money in the long run than you would spending your dividends. But dividends are nice to have. A lot of people live on retirement through dividend income, and so that's what it is. A dividend is very simple, and if you buy shares, and I suggest if you want to buy shares, you should learn how to do it. You should take a course and learn how to invest in the stock market. It's not gambling. It's not like a casino in Vegas. Investing for the long term is buying companies at the right price, buying good companies of value that have good management, good prospects, and are showing a track record of earnings growth. That's the sort of companies you want to buy. But wait until you can get it at the right price. And there are ways of calculating what is the right price. But you need to do a course on that. If you want to do a course, drop me a line, and I'll point you in the right direction. So I would suggest, personally, I think you should invest in shares, but do it properly rather than just leaving it to a fund manager who often do not perform very well. And I was talking yesterday about the fund managers that says, even though the market is set for a fall, you should stay in the market. Don't sell. Stay in the market, and stay calm and this sort of stuff. But that's rubbish. If you had your own money in shares and you felt the price was going down, or you felt it reached a peak, you'd want to sell it and maybe live to fight another day. So I would suggest learning how to do it yourself. Just like if you're going to invest in property, learn how to do that yourself and do it well. And if you can't do that, just go into an index tracker fund. But as always, take advice from your own financial advisor, and don't just listen to me, because I'm not your financial advisor. I don't know your personal situation. So that's all for today. Thanks for listening. Hope you enjoyed it. This has been Charles Kelly, bringing you money tips to help you save, earn, invest and accumulate and enjoy more money. Check out my website, moneytipsdaily.com. Thanks very much.